Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too. So for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right. Good morning, guys. Welcome back to another live stream. Thank you for being here. We've got 9:20 here on the clock. We're about 10 minutes out from the U.S. stock market opening up. Got a lot of stuff to look at here. We've got, well, a big week to say the least. This week we have CPI, PPI. We have all sorts of inflation reads. And, last week we had the jobs number. And it was really an important event, right? Jobs basically came out not great, okay? So jobs kind of missed. And where that takes us in terms of kind of market expectations is now it's all about CPI. And what people want to see in this case is they also want to see CPI coming down. When I say people, what am I talking about? Well, if you're somebody who wants to see the stock market rally, if you want to see gold rally, if you want to see, assets kind of move higher, you want to see the consumer price index show some economic cooling alongside this jobs cooling. If both of these two things are kind of coming down, right, it could actually be still an okay scenario. Because if you get inflation cooling while jobs are also kind of chilling out as well, then the Fed might just say, hey, let's go ahead and cut rates, right? Let's go ahead and bring rate cuts into the picture. But let's offer the scenario here, at least the possibility, which could be the case, that inflation actually comes out and it's not really going anywhere, or maybe it's even going up. Either of these scenarios, and now suddenly you have a different picture from the Fed. If you get cooling jobs, but inflation is still a problem, the Fed may just stay flat for a longer period. They're probably still going to cut rates. The question is, are they going to cut it sooner or later? And we're going to get that answer. We're going to get a little more clear of a picture as to what they might do based on what we see with the consumer price index. Today, we've got a lot of stuff to go through. We're going to be taking a look at the week ahead. We're going to talk about fundamentals. We're going to talk about technicals. We're going to also take, of course, a look at the commitment of traders data. I figured that would be a useful piece of information for us to go through together here today. But let's first just really quick check the kind of full movement of the market here today. Take a look across the board here. So we've got the S&P 500 coming down. Same thing with the NASDAQ, same thing with the Dow. The dollar index is actually looking pretty strong here this morning. And the euro coming down, pound dollar coming down. And at the same time, you've got gold kind of chopping flat, but still stays relatively supported. We've got 21.78 per ounce right now. That's in US dollars. Still pretty strong in terms of the price of gold. Doesn't seem to be giving back any of those gains just yet. At the same time, we've got oil coming down here this morning. And overall, again, a bit of dollar strength, a bit of gold holding up. I would say that that's looking a bit of risk off, especially with stocks down as well. So as we go into this morning, this Monday morning, it seems like kind of the main approach of the market is to stay pretty risk averse, especially with CPI on the horizon. Who can blame them? A lot of people might just be taking profits, might be taking money off the table ahead of that CPI number. Here's the S&P 500. We'll take a look at the 4-hour chart. Coming back down to support, and will be very interesting to see how the stock indices can react to levels like this. Again, what happened on Friday was the jobs numbers came out actually pretty weak. And initially there was some chop, but the follow through was to the downside. We saw again with the stock with the labor market looking a little cooler, it is actually suggesting, in my personal opinion, that we may see the Fed need to pick up the pace in terms of its rate cuts. If we continue to see economic data that's cool, the Fed's going to say, well, we don't really want to see unemployment tick up. By the way, unemployment rate, guys, went from 3.7, it went up to 3.9. And that's a meaningful move. And it's probably catching the attention of the Fed. If that goes up into the fours, I would imagine you would get even more attention from the Fed, right? Because inflation, they want inflation to come down, but they also want jobs to stay okay. And so if this number continues to creep up, you may see more pressure on the Fed to cut rates. Now, wouldn't rate cuts be good for the stock market? Well, yes, but only if the jobs market looks relatively strong and inflation's coming down. That's when the stock market will rip, right? That's what's been causing it to rip, is the theory that that could actually be the case. However, again, recently we've seen a little bit of a counter to that, where we're seeing, well, the economy looks like it might be seeing some trouble alongside that inflation coming down. That's not as bullish for stocks. So I've been kind of vocal about this, but I do think that the S&P and the NASDAQ, they need to pull back here a little bit before I personally get interested again. What do I think is a reasonable pullback? Well, I've made this point several times, but I do think that a 5% correction in the S&P 500 from its highs is an appropriate pullback. That happens, by the way, very frequently, very often in stock market history. In fact, on average, I saw a cool stat. On average, you get a 5% or greater pullback 3 times per year in the S&P 500. We haven't had one yet this year. So here's one that could potentially come into play. A 5% pullback brings us very nicely down to this level of support here. And that is, again, that's a 5% corrective move. It looks pretty ugly in the short term, but that's still very, very appropriate in a longer term pullback. So in my view, that's where I'd like to see the indices go, to see a possible, bullish setup, etc. So when it comes to the NASDAQ, what about the NASDAQ? NASDAQ's pulling back here a little bit more today. NASDAQ, same kind of story. And in fact, the NASDAQ is inherently a little bit more volatile usually than the S&P and the Dow. So if we take a look at this one, kind of set up our zones, a 5% pullback is only about here. Very possibly we could see a 5% pullback in the NASDAQ. In fact, you probably, arguably, see that faster than you would see one in the S&P. In this case, if we really saw a corrective territory, you could see like 8%, right? 8%, by the way, would be kind of erasing the gains that we've made this year so far. And is that possible? Sure, it's possible. I'm not necessarily saying, oh, I think this is happening, right? This is a very different, put it this way. I don't have shorts on the S&P. I don't have shorts on the NASDAQ. I don't have a negative position on them. I'm just pointing out that in terms of the indices and how I'd like to trade them, I'd like to scoop them up if they do pull back to those kinds of levels. And I think that the risk to reward premium looks a little bit better. The setup looks a little bit better after a pullback in that, rather than trying to buy things before that. It's my personal setup. So yeah, love the fundamental stock. Thank you very much. Thanks to everybody in the chat here. Appreciate you being here. Thanks for hanging out. 273 of you guys. Do me a quick favor, if you're enjoying the show, make sure to hit that thumbs up button. I would very much appreciate it. And yeah, applied for a free trial for the EdgeFinder. If you'd like to speak about trials directly with someone, we'll drop a link here in the chat right now. Our trials are not free. Transparently, we have too many people who are asking for it. If you're serious about the tool and you'd like to get more information about how you can get access to the software for 30 days, we'll drop a link here in the chat right now. This will connect you to a real person on my staff who can help you out. So yeah. So you can apply here, or if you'd like to speak to someone directly, we'll drop the talk to link as well. Okay, so let's see what else we can get into here. So again, stock indices kind of pulling back here this morning. At the same time, we do have gold here, which hardly pulling back at all, you can see. And quite interesting there. I need to check on my GLD position. I believe, yep, we trailed stops here yesterday. USO, I believe, should be closing me out. Let me see. We are like right at stop. So let me see, where are we at? Actually, you know what? We're just going to go ahead and close this position. So I'm going to close my oil trade for a profit there. We are out of oil. That is a $3,000 profit. So we will take it. It's pulled back a good bit here and kind of broke my level of structure on the, yeah. So with this breakout here, I'm just going to go ahead and close, take profits on oil. It's been a little bit choppier than I expected it to be. And when this broke, right, when we broke higher, I thought, okay, I actually added to the trade here. So my initial entry here, my secondary entry here, we did see a pop higher, but again, couple rejections here. I'd like to be back in oil, but I'm going to wait for a new signal here to set me up for another trade, because right now this chop has gotten a little bit too indecisive for me. So I've just taken profits on oil, made about $3,000 on that, which of course, if you were watching during this time, I was up 10,000, right? So hindsight 2020, we were up, 10,000 at one point. Shoulda, coulda, woulda closed it right there, but we'll take a profit where we can. And again, with this market kind of rolling over, I'm just going to step out of the way for now. What I'd like to see for oil, people who are bullish oil themselves, what I'd like to see would be, honestly, clear those highs, pull back, and maybe I'll rejoin the idea. But for now, this is getting too choppy for me. Yeah. So that's oil out of there for a profit. Silver, really quick, is another trade that I have on. Silver, I've trailed my stop loss just below structure lows here, trading it via ETF through SLV. So we're up $670 on silver. I need to update you guys too on my Chinese stock position. So here's gold really quick. We'll do gold. Gold is flying here. I see nothing else to do other than just continue to manage the position. So I've trailed my stop loss several times on this one. This one keeps wanting to run. And hey, if we break through the highs and we keep going, guess what? Trail stops again, right? It's just a really, from here, if you're wondering, hey, how do I join this trade, or how do I, how far is it going to go? When should I short it, right? In my personal opinion, if you really want to know what my opinion is if you're in the trade, then great. We're making money. We're good. We trail stops. We let it run. And members who are in the group and caught this trade with me, shout out to you. We're being rewarded for our patience now. What's going to not reward you, for people who are not inside of our VIP room, who are not in gold right now, what's going to punish you is watching this move and getting anxious, getting impatient, getting excited. A lot of traders right now are shorting this, okay? But they're not shorting it from up here. They're shorting it from here, 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 here. I can show you that data. We've talked about this several times on the show, but let me pull it up. First of all, notice really quick that based on a retail positioning standpoint, gold is giving us a bullish reading. Let's dig into that. How does the algorithm know that, again, retail positioning is generating a bullish signal? Why? Why is that generating a bullish signal? Let's go look. So if we take a look at retail positioning really quick, what we can see here is that as this gold market has continued to drive higher, retail traders are only 31% of them are long, 69% of them are short. So again, retail money is parked on the wrong side of this move. As gold continues to push higher, retail traders are saying, it can't go further. I got to short, 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 until the whole account blows, right? That is game over, day in, day out. That is how traders lose a bunch of money. They say, this thing has gone too far. It's got to reverse. Come on, man. It's going to, this is getting ridiculous. And they just fight that movement. And, let me add something else context-wise here, guys. I want to show you one of my favorite indicators within the EdgeFinder. It's the smart money indicator. And what we can do here is we can select gold from our drop-down list. And again, I've made this point many times, but I want to continue to reiterate it. Look at this, okay? Institutional money is in blue. Retail money is in red. Okay. The white line is the price of gold. This by itself should convince you that you need to be very careful just trading alongside a retail crowd and trading against big money. If you do not have these tools, this is why this is worth the investment. I'll tell you about that in a second. Let me explain something to you. If you are just shorting gold right now and you don't know why, and you don't know why it keeps going up, you are respectfully trading exactly the same way as all the other traders out there who are losing a ton of money day in, day out in the markets. I'm not trying to disrespect you. I'm just pointing this out to you. This is a repeatable pattern. I've done this. I've streamed on YouTube since like 2019, 2018. I've been doing this for a long time. This story has played out in front of my eyes hundreds and hundreds and hundreds of times. Okay. What happens is institutional money starts building a position. And as the market starts to rip higher, retail traders all bet against that move, and they just continue to get slapped over and over thinking that they're going to call the top of the move. Okay. This indicator by itself has paid for itself many times over for me as an EdgeFinder user. And I have paid for the EdgeFinder, not the retail price, but the construction price of building the software. Let me tell you this. This tool is incredibly useful for spotting what institutional money is doing relative to retail money, so you don't get caught in this trap. When there's a big divergence between what retail is doing and what institutional money is doing in blue, be very, very careful, okay? Trying to go against that. We've been long, we rode this up as we saw the early signals, and we've been making money doing it, okay? So if you're asking, what do I do with gold right now? The answer is you missed it. Accept that you missed it. If you missed it, it's okay. The next move will be around the corner. My point is to tell you that strongly is that a lot of people out there are just going to continue to do what they do over and over and wonder why they lose money in the markets. So transparently, this is a bit of a pitch to why our products are useful, why our products are worth the money they cost. And if you are interested in getting the EdgeFinder, again, right now we are currently doing a 25% off discount. If you use the link being dropped in the chat, you can speak to someone on our team, get access to that tool yourself, and start using data to spot these things before they happen. And when they are happening, make sure you don't get trapped by them. Okay. Gold, for me, will continue to move higher until it doesn't. And when it doesn't, I'll trail out and take my profit and walk. Okay. So if you want to be in the same camp, if you want to be finding those sorts of trades, again, the EdgeFinder is not a holy grail system. It's not going to make you profitable. It's not going to tell you every trade to do all the time. No way we would promise you that sort of thing. But if you'd like to get access to data that helps you spot opportunities when you know how to find them, as well as, by the way, it comes with a tutorial and course on how to use the tool, send us a direct message. Get access to the 25% off discount before it does end by shooting us a DM using that. But yeah, the reality is if you're not in this, you missed it, and it's okay. But if you're trying to just short this, I'm telling you, over and over, people have been getting destroyed thinking that they've caught the top, right? What if this thing rips higher? What if it does that move? That totally could happen. Gold's been in a range for several months. Of course, it could potentially cross above 2,200. It maybe could go to 2,250, right? I don't know where the top of this trend is, and I don't think it's wise to try and think you do, because again, it's gonna be a rough ride if you've been trying to short this thing, right? Not to say it can't pull back. It probably will pull back at some point. But for me, if you're not in it, you're just you're being impatient to watch it right now. And I'm telling you this from experience. Let me be harsh on myself. I have mentioned last week that I really was frustrated by the NASDAQ moves that I missed. So let me show you a trade. This is a real trade. So I'm not just criticizing people who aren't trading exactly like me, because that's not like I'm perfect. I bought the NASDAQ here. I got stopped out like here. And then NVIDIA earnings came out and they smash hit and they flew. So I'm telling you this from experience. This still doesn't mean that I chased the move, right? I'm telling you right now, for me, I would love to be in this move, but I have to be patient. I have to wait for things to correct. And if they do, then I get my trade. And if they don't, then I missed it. And so sorry, that's markets, right? You got to be realistic with this stuff. You can't chase. These are, if you're trading with real money, you probably, like I have, you probably worked hard for the money that you have, right? Don't waste it being impatient and, just chasing markets. That's not the way to go. Retail traders proclaiming that gold must fall. It's everywhere, right? Whenever you see a big move, it's no question that, again, usually, and here we go, we're back to green, right? When it's ready to turn, it will turn. But if you're just thinking, oh, it's got to turn today, it's got to turn today, it's got to turn today, you're just doing exactly what all the other retail traders are doing, okay? Analysis on silver. I'm long silver, same kind of story. Silver, I think, has more room to run. It's been, again, if we're going to see a real metals market run, silver will do very, very well. That's if, right? We don't know. But right now, gold is looking really promising. And with gold, I would actually expect to see silver outpace gold if we're going to see, again, a metals market run. Also, I'm kind of glad that I sold oil. Look at this. Oil just dropped right after that. But yeah, I'm out of gold. I'm sorry, out of oil, still in gold, still in silver. And I got to show you guys too my FXI position. So, oh, look at this. Here we go. We're looking great. I need to sell a covered call on this as we speak. I need to do that. So I sold calls against my FXI position. This is the Chinese stock market. I'm long the Chinese stock market, but I want to write another covered call. So what I'm going to do here is I'm going to pull up my Webull account because I need to do this. So we're going to go in here and I'm going to pull up FXI. So FXI, I need to get into my trading stuff. Okay, so I have a position on FXI. What I need to do here is I need to sell a call against my position. So I'm going to go to options really quick, and I'm going to try and be quick about this, but this is something that I would like to get done. Let me see. Are we going to have, we might need to wait a few more extra minutes to do this. Yeah, we might need to come back to this. So what I'm going to do is I'm going to sell, by the way, a 1 month out. The options quotes have not yet. I think they're delayed 15 minutes for my broker, but I'll do that soon. What I'm going to do is basically sell a covered call against my position. I have 2,000 shares. We're up $2,400 on this, and this is a very volatile market. So what I like to do is I would like to get called away from my shares. This is a trade. This is not like a super long-term investment for me, but the calls that I sold previously expired worthless, meaning because I sold them, I made a 100% gain on the calls that I sold. So I'd like to do that again. And for me now, the strike price, I'd probably like to move it out to like 25. And real quick, let me just look at my daily chart. So we could see a move up to like 26.5. So I might look at the what kind of premium I could get for selling 26.5 calls, but that's pretty aggressive. I might go ahead more for like a 26. Yeah, 26 might be appropriate. So I'm going to look for maybe selling 26 calls or 25.50. Haven't decided yet, but once the options are updated, I will probably do that inside of the room. If you're not in the VIP room, I'll share all of my updates, whether it be commodities trades, FX trades, indices trades. But yeah, I do have plans to write covered calls against my FXI position, as I mentioned here this morning. So watching for that. Yeah, and oil keeps going down. So I feel like I made a decent call to go ahead and close out of my oil trade, obviously in hindsight, but I closed it, just before this drop. Yeah, crazy. NASDAQ, let's see really quick. NASDAQ sitting at just under 18,000. Be curious to see how it reacts to this 18,000 area. If you're a bear, you really want to see this level break. And if you're a bull, you really want to see this level hold. So this is a pretty key spot here. Previously, again, resistance, we broke out, we retested, found support. Now we're back there. Question is, are we going to find support again? Or is this going to be kind of a slide down that we've been looking for in terms of a pullback opportunity? We'll continue to watch it. So be patient with gold. Got it. Yeah. I mean, at this point, a lot of people, what they're going to do, I can tell you right now what a lot of people are going to do. A lot of people are going to make a mistake on gold right now, and it is almost certainly going to happen. It happens every time you get a market move like this. Again, if you're new to trading, let me gatekeep a little bit here. I've been doing this a long time. Okay. I've learned some things over all my painful lessons. When a market moves like this, what happens is there's two camps. There's people who think it cannot go down. They think there's no way this thing comes down. It's rocking. It's going to go to 2,500, right? It's going to go to 3,000. There's those types of people. They'll get themselves into trouble because they'll buy the highs thinking that it couldn't possibly pull back or keep coming down. And what happens to those people is that they buy thinking this can't possibly go down. And why is that a problem? Well, if you actually are constructively buying gold intraday, there might be something there. Like you might have a strategy, you might have a reason to do so, but you're prudent with it and you have a decent size, but not like an incredible size, right? There's a difference here. Some people will go all in on gold thinking it cannot possibly go down. It's going straight up, right? So people like that will get themselves in trouble when a healthy pullback comes and they get completely wiped out. On the flip side, there will people who will short this thing thinking that it could not possibly keep going. And those people will get margin called because so my point is these sorts of moves, they bring on tons of trading mistakes from a lot of traders who are new to this stuff. Markets like this, they can continue to chug higher for a week straight further if they wanted to, right? We as traders, like, again, you can't be chasing these kinds of moves. You have to be constructive with them. Again, I illustrated how we spotted this trade. It was illustrated in the top setups algorithm within the EdgeFinder. You can't just be chasing the current, shiny chart. You have to be prudent. And again, if I didn't have a position on gold that I already took, I wouldn't be trading it up here. There's nothing for me to do up here, right? Other than because I already have a position, trail my stop and be patient with it. But yeah, something to think about. Again, I mentioned if you do not have a copy of the EdgeFinder, that 25% off sale is ending soon. Again, 25%. It is a huge discount. If you have not taken advantage of that, we'll drop the link here in the chat for you to send a direct message to someone on my staff who can hook you up with that. Real quick, we're going to take a break and we're going to come back with Ivan, speak with him a little bit about what he's seen in the markets here on this crucial week with CPI and PPI coming in here this week. So coming in just after this, we're going to take a break. Thank the sponsor. We'll be right back.
Attention A1 Trading Show fans. If you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we're back with the one and only Mr. Ivan FX. Hey, Ivan, how's it going, man?
I'm doing good.
I shorted the USD TRY like 6 years ago. I haven't checked my position. How's it going?
Doing good. I got a question earlier in the mentorship group about Turkey, so I wanted to put a light on that. But why is it? Was it 32? I remember it to be like 12 or something. So it's falling. Now I have another question. I thought about it earlier. I know I'm going to calling you out. Yeah. But are we getting merged? Like, are we sitting here like with A1 trading kind of t-shirts or shirts or something one day?
We have them somewhere. We created some
you're
shirts.
Wearing one.
Yeah, we have some. I gotta find the store link for you, but we do have it on our website somewhere. Julie put together a whole store of some stuff that people can pick out for themselves. But yeah, I should totally get you a shirt somehow. You've got your own. We've got ours as well, so you could be rocking the combination, the super powered combination.
And we need to be branded. You can't be around here like just wearing Ralph Lauren all day.
Oh, you're right.
But
You're right.
but yeah,
I also I just wanted to mention before we go further, Ivan, for everybody who's tuning in, we got 350 people here. Ivan is one of our coaches within the Discord channel. He does coaching webinars for members, answers questions. He also does one-on-one coaching. And Ivan, I wanted to ask you about something. To members, you offered like a free like 30-minute like one-on-one, right?
yeah, tomorrow.
That's awesome. Yeah. So if you're a member, just check the VIP webinars. That's something that Ivan is doing. I think that's a really, really cool idea. If you are looking for some one-on-one help and you are already a member within our Discord, but you have some questions, obviously one-on-one, that's Ivan's time. So please respect that. Please, take advantage of that. If you're serious about it, send a message to Ivan. I'm sure he would be happy to hook you up with that. So Ivan, I thought that was a great idea. Just wanted to call attention to it.
Thank you. I
Yeah.
thought it was fun.
Yeah. So Ivan, next question for you. This week we have CPI coming in tomorrow. How are you preparing for that? And I guess what are you watching going into such a key event?
Preparing. I don't trade. I'm kind of looking around, kind of like what was the PMI, what's in oil. I'm trying to see if there's any changes in the other indicators that would force CPI to go somewhere. And then I look at previous volatility. So what happened last time, then previous before that in terms of volatility. So we're probably going to move like 50 pips or whatever the direction. So what I kind of see is if we get lower than expected CPI, we're going to drop like a ton of bricks. And then if we get higher than expected CPI, it's going to be subdued. It's not going to be as much because the market has really priced themselves into becoming bearish on it. So yeah, I think that's kind of where the market wants it to go. And if it doesn't go their way, they are going to resist dollar bullish reaction.
Sure. Yeah, I think it will be interesting to see again with CPI following that jobs data, which was really strong. I'm sorry, really weak. If the inflation story will also kind of mirror that, like, are we going to get a scenario where jobs data is cooling, but so is CPI, which would be probably pretty dollar bearish, or is there going to be cooling in the labor market, but at the same time, inflation kind of stays sticky? What do you think about that scenario? Let's say that you get jobs data. Obviously, we know what jobs data is. Jobs data came out pretty weak. But what about if you get jobs kind of cooling, but at the same time you get inflation staying high? What is your thought process in that scenario? How do you approach that environment? Because it could happen.
I think I'm not gonna. It's not correcting you either way, but it's what is normal is inflation to fall and jobs to get worse, which hasn't happened. So it's kind of like welcome to the party, unemployment rate, an NFP. So to me, it's kind of like it's a mind twist because it's so abnormal because they should fall. Also, inflation should fall and unemployment should rise, and they haven't done that. So when they do opposite, it's kind of like a brain twist for me. But in that scenario, I think I'll still go with the inflation. I will still say, okay, inflation is lower, or sorry, inflation is where it is, and I will still be all bullish, and I will deal with that later. The other thing that I have to remind myself then is when is the FOMC? What is FOMC going to say? What is Fed? What is Powell going to say to that? And he's going to be higher for longer.
Yep.
So yeah.
No, and that's the thing is, could inflation stay sticky with cooling jobs? The idea, of course, as you mentioned, is that if you get cool down in jobs, it should theoretically be that hiring and spending is going to deteriorate, and so should inflation. The only scenario that I can see that would not be the case would be if there was like more still supply issues that are causing inflation. If jobs are like demand issues to inflation or lack thereof, supply side stuff, whether it be, if you see, for example, not a good day to give this example because oil's coming down. But if oil were to be on the rise again, which it has been kind of secularly in the last month or so, if you were to see oil start to tick up, that could still paint the picture of cooling jobs, but sticky inflation, not because there's a lack of demand, but because there's a supply issue, right? So I don't know. Interesting times ahead. And I guess the follow-up question too is, Ivan, we're seeing stocks drop, we're seeing bonds rally, and we're seeing gold up as well. But then there's Bitcoin going up at the same time. So it's kind of a confusing room right now. I would actually say, and this might be just weird, but it's almost like Bitcoin is rallying alongside gold as a risk off, like a concern about the dollar. I don't know. Really interesting moves happening.
Okay, let me debunk it. It's about money. It's about money flow. Bitcoin is going higher because of the ETF, because of, I guess, it's more
accessible,
more accessible and higher, more funds going into it. Even though it's still very risky. Also, we did see Bitcoin going from, what was it, 60,000 to 50,000 in an evening. So it's still incredibly volatile. But that's kind of Bitcoin in itself. Bitcoin to me is a mirror of the S&P, just more risky, more volatile. You invest in Bitcoin when you have more money. Basically, you invest more money in the stock market when you have excess funds. That's how I see why it goes up. For stock market to fall, I don't know, Mike. It has risen. Was it 25% since October, beginning of November? So this is just a small little correction. And to be honest with you, with CPI coming out tomorrow, we have to have some rebalancing at some point. Because if we have gotten 24-25% return in this period, and you're like, I'm gonna gamble it tomorrow,
right? Yeah, and
the manager is not gonna be happy.
Yeah, it doesn't continue like that forever. And I think that there's probably a bit of a reset happening. I would actually point, as you just mentioned, we've had this really hot run. At the same time, you see gold doing well, silver doing well, bonds doing well. Those are signals. One of these markets is going to come down. It's either going to be gold, silver, bonds, or it's going to be the S&P 500. But I don't see a scenario where they both just keep screaming higher overall. And we're starting to see, again, alongside those rallies, the stock market kind of pulling back. But really interesting times, especially ahead of CPI. Yields are coming down. So for me, Ivan, I've kind of switched back to, and I think we've talked about this recently, cautious on the dollar. I mean, the dollar looks like it might be a little bit weak right now, but I guess we're going to have to see what CPI says, right?
Yeah. I just want to preface something. Where are we on the 10-year? We are at 4.08. What does that tell you?
Well, it tells you it's a lot higher. It's a lot lower than where we've been, right? We've been much higher than this. We were at 5. We were at 4.5. We're now at 4. The lowest was 3.78, but we are trending down. And so, what is it telling you?
Pre-COVID, we're 2.5. We were at 5. We're now at 4. We're coming a bit down. Yeah. We're now no longer at the elevated state that we were in. Markets, S&P, bonds, gold is all pricing in rate cuts this year. And now that we are unwinding that, so it tells me that we're unwinding the higher inflation that we have peaked, we have peaked inflation. So it tells me that better times are ahead.
Yeah, and one thing I also think it's kind of interesting too is that we've had an inverted yield curve. I have this chart on the EdgeFinder somewhere. I'm curious. I haven't looked at it recently. It might take a second to load because this is a beefy thing to load. But the yield curve, of course, takes the 10-year bond yield, subtracts the 3-month note yield, and it kind of tells us where we're at. And what we can see is that we've been inverted, which is basically, again, we're in the negative territory for some time. This has actually preceded all of the last several recessions that we've seen in the last few decades. Here's the 2000s, the dot-com days. Here's 2008. Everyone knows that one, and even 2020. So it's very interesting. What usually signals it, though, Ivan, and I'm sure you've heard of this or you're aware of this, is not necessarily when it goes into inversion, but rather when it comes out. And so if we do see that coming out phase continue, at that time, we could start to see a bit of a kind of an economic contraction. And we've become so inverted compared to historically, historical times. I wonder if that might take some longer time to get back to kind of a normal or normal curve. But I don't know, kind of I'm glad you brought that up. It is a good thing to keep an eye on.
If I'm allowed to say one more thing, in terms of investing, it's a response to Lee James. In terms of investing, you have like three options. You have gold, bonds, stock market, and it's a constant like distribution of where do you position yourself in the triangle. Like it's the same thing as price, quality, or time. Like which two of the three are you going to choose? So gold and bonds are correlated because they are kind of opposites. Like you either do gold or you either do bonds. Can do both, but it's kind of like it depends on your risk assessment of the market. And if you are completely risk on, you're not going gold, you're not doing bond, you're doing stock market.
So. Yep. Nope. Very well put, Ivan. And I do want to just say, for those of you guys who heard this earlier or have not yet, Ivan is doing one-on-one coaching. He does that as a paid service usually, but right now he's doing something for our Discord members. If you're somebody in our Discord already, he's offering free 30-minute calls to go through stuff with you. If that's something you are thinking about, I highly encourage you to send him a DM on Discord and set that up, because that is some great value that you're offering, Ivan. For anybody who is listening, take advantage of that. Ivan, thank you very much for coming on the show, for adding some wisdom. I'm sure we'll hear back from you as the week progresses and we get some of that CPI data. So thank you very much for coming on.
Thank you very much for having me. But it's time sensitive because the meetings are for tomorrow morning.
Yes. Well, Ivan, thanks for coming on. We'll see you next time.
Thank you.
Always good to have Ivan on. Again, he's a coach within our Discord server. And if you're not already, make sure to shoot him a DM. It is worth speaking with Ivan. He's very helpful to a lot of traders. Okay, so what we're going to do now is we're going to switch over. We've got Chris and Frank who are going to join me on the show here to take a look at some stuff. While that is happening, I'm going to pull up the COT data. So we're going to take a quick break. We're going to come right back. We're going to take a look at everything with Chris and Frank coming in right after this. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. And if you're an algo trader looking to get set up with a VPS, we've got an awesome discount for stream viewers. We can get you 30% off with code A1Trading30. The link for that will be dropped in the chat right now. If you're watching this stream at a later time, you can also find it linked in the description below. They have a 14-day money-back guarantee, so take advantage, check it out for yourself, and now back to the stream. All right, guys, and we are back with Chris and, of course, Frank. How's it going, guys?
Pretty good. How are you?
Excellent.
Good to see you
Happy
guys.
Monday.
Yeah. Yeah. Hey, so we're seeing a little bit of a pullback here. We got CPI tomorrow, PPI Thursday. It's a big week, and that's a big week following what was a big week. Probably expected to see some volatility. I noticed that the VIX is already bright and early up this morning. Here we see higher volatility. Of course, kind of makes for an interesting time in the options world, which I know we'll chat about. And real quick, I did promise to say it, so let me just really quick pull up the commitment of traders data. For those of you guys who are curious about it, I'm just going to run through this really quick and then bring these guys and see their reaction to it. Silver got bought, gold got bought, oil got bought, pound, Nikkei, which I thought was interesting because we saw some sell-off there. The dollar slightly bid up, the yen bid up, pound. And then on the sell side, couple things here: the Dow, the NASDAQ, bonds, platinum, the Canadian dollar, CHF. So there you go. That's kind of a walkthrough of the latest filing from the commitment of traders data. Thought that was kind of worth mentioning here as we come into what is starting out to be a risk off week. Chris, what do you think about in terms of this market movement that we're seeing? Stocks down, bonds up, VIX up, gold up. Kind of interesting, huh?
I think this is the first dose of reality we've seen for 3 months. From November, December. I mean, so last week I was actually writing my blog on Friday, and I'm like, as I'm writing this, it looks like we're going to have 17 of 19 weeks closing bullish. The SPY was hanging on by a sliver, holding green on the weekly candle. It was a aggressive sell-off on the S&P and the NASDAQ last week. Just to end up finishing. So if you look at the weekly chart, Nick, you can see like it's a red sliver of a candle, but after a 25% rally from that dip in October, it's the perfect time just to have a little reality check, right? We've got big news, CPI, PPI this week, Tuesday and Wednesday, or Tuesday, Thursday, and then next week we have FOMC. Also, what's been happening quite a bit in the Forex world is we've seen the Japanese yen make a pretty decent run with some strength over the last week or so. There are rumblings coming out of Japan that they might be discussing wages and deflation and possibly getting off of negative interest rate territory, which has been the rumor for a while. But the Nikkei dipped about 5% from the highs recently, and I think that's translating into stronger Japanese yen. Nvidia had a huge sell-off last week, over $100 from the peak. So it's like, could we see some aggressive profit taking on these crazy, AI semiconductor stocks, possibly going back into, a little bit safer haven, lower beta in the stock world? But it's just, like I said, it's reality. I mean, a 3 to 5% correction is healthy. To get that, we come back and retest maybe the Nvidia gap here. So this is the SPY. We had that big sell-off on Friday. We're overbought still. This is the gap that I'm looking at. So the 500 or 503 is where the touch of the gap is. 497 fills the gap. I did take a trade this morning. I looked at a 508. It's a 4-leg position. I just added this in. You can show it right here. Let me see if I can find it. So the numbers might be small, but let me see if I can find the recent trade. I'm going into positions on the SPY right here. It's I did a March 22nd expiration. Let me change the font so that makes it a little bit bigger. Let's go 100%. There we go. So I did a trade that expires on the 22nd. So I thought of it this way: I'll pay a little bit more for the time, but I want that time to give me the biggest window of volatility in the next couple of weeks. CPI this week, PPI this week, FOMC on Wednesday, next week on the 20th. So I'm incorporating all of those major news announcements. If we have enough volatility this week where the SPY is pushing down below $500 or pushing back above 520, I'm going to take some profits. So the trade that I ended up taking, I did a 508 put by a 512. It's essentially a long strangle, but I sold legs against those. So I'm doing the 508 right here on the long put, and that's by the 495. So I'm looking at a $13 max profit. And then on the 512 to 525, that's a $13 max profit. I paid about $6.60 for it, or $6.73 is my debit. So if I do the math really quickly, it's essentially a 1-to-1. I think the probabilities are pretty decent. So my max profit's 13. I paid $6.73, so I can make $6.27 on the trade. Divided by the $6.73, I'm going after about a 90% take profit if I max it out. But if we have a decent amount of volatility and we're pushing towards those sell levels or kind of the brackets on the outside, then I should be able to get, of my max profit of 13, maybe we push into, like, I could probably get $11.50 to $12 this week in profit. So that's my first trade for the SPY. One thing that was interesting is I tried to price something out. I talked about this maybe last week. Frank, you and I discussed this a little bit. I'm trying to kind of get better at this strategy. I don't know what to call this one. It's kind of like a quadruple double diagonal, which is ridiculous. But it gives me all these opportunities to make money where I just have to stay away from the dead zone, but I can make money. You know, if we go left, I've got a peak, and I've got max profit. I've got a peak,
Makes
and
no
max
sense.
profit. So it's literally
Interesting.
like 6 ways to make money. There is a dead zone, there is risk, but this is a very expensive trade. And I'm looking at, how can I kind of craft these positions on the SPX? If I can find this trade for like $10 or less, I'll take this trade probably every week or two. But we also have monthly expirations on Friday, which I believe are quarterly expirations as well. And I think this morning we had AM expirations on the SPX. So there's all sorts of weird stuff going on, like Friday with the SPX. And so I didn't take the SPX, I did the SPY. But long story short, I think we've got some good positions in. I still love gold and silver. I mean, honestly, I know you guys are watching those as well. We talked about this last week on the show, this strong break of gold at 2075. I mean, I hope there's a pullback, but
Yep.
a bull flag would be great. A pullback would be fine. I'm still long on gold.
Yeah, no, thanks for breaking that down, Chris. And again, you went right where I was going to go because, of course, half the audience loves watching their gold. And I want to go to Frank too about this with the indices. We'll come back to gold in just a second. You're seeing an interesting picture. You've got the VIX up here quite a bit, up 8.5% after it was up last week. Gold's hanging in there. The dollar index is up. You have silver kind of making some kind of move, or it kind of gave back some of that. Don't even get me started on Bitcoin because I think Frank's theory on Bitcoin might be coming true. And I want to let me not take Frank's thunder here. Explain that to us again, Frank. Gold and Bitcoin are moving higher. You were pointing out that it could not just be some sort of simple risk on kind of move. And I would say up 4% on a day like this is something to point out. What do you think about this Bitcoin move? And I guess just how the broader market is moving today?
Well, I don't know for sure, but seeing how Bitcoin's move just on what we think is the basis of them having probably isn't, in my mind, the sole reason, especially the fact that gold went up as high as it did. I think, let me pull up gold or Bitcoin. The fact that they're running up this high at this rate in such a short span of time makes me think that there's something else going on. And I'm just seeing over the past few months, GDP kind of halting, slowing down. Inflation came up, core inflation came up, and the rest was unchanged. Labor was not as hot as expected. So last month we saw like 350,000 came down to 229,000 on revisions. So the labor market's not as strong as we think. The rate of its growth is much slower. So the 275,000 we saw this month, I don't believe at all. It's probably going to be different when they come out with revisions, and probably lower. So when they show us what we have so far, slower growth, slightly higher inflation, tomorrow CPI is going to be the big deciding point. I think if we see higher inflation, especially in core, I think that's going to be that stagflation scenario. And I think that's why Bitcoin and gold are moving as hard as they are. I think it's a hedge against the dollar. And
yes,
if they're wrong, maybe Bitcoin and gold come down a good bit. But until then, I think they're using Bitcoin as a hedge too.
That's so fascinating, Frank, because if you had said that 6 months ago, everybody would have looked at you and said you're an idiot, because again, Bitcoin for a while was just a risk asset, just going to go up with stocks, going to go down with stocks. But I came up with a name for your theory. Is it the sound money trend? Because again, people go to gold when they're concerned about, hey, is the Fed going to be able to do all this? Is the economy going to stay in for the US? Like, it's that big global reserve. But we're having a conversation this weekend, my dad and I, well, and he loves to talk about this stuff as well. And I was talking to him about, what if you said to everybody in the world, hey, your dollars are worthless? And if you just said that, and let's just say that was announced, and that would never happen. But if it did, we started thinking, well, gold would shoot up, but so would Bitcoin. If you didn't have another alternative, it's almost like the sound money. If there was a call of question of like, hey, what is sound money if the dollar's not, trustable, then Bitcoin would probably shoot up. So I really liked your theory on that. I thought it was worth mentioning. And again, it would justify this recent move despite the stock market selling off. You're seeing Bitcoin rip higher. You could just chalk this up, and maybe, Chris, maybe this is what you think. I don't know. I mean, you could just chalk this up as like, oh, this is FOMO, right? But maybe there's something too uncanny about Bitcoin and gold moving together, arms linked. What do you think, Chris?
I think it's hard to deny. I mean, just price action alone, there's clearly something happening. I did read something interesting last night that there are some major liquidity spots sitting at 75K. And the only explanation I could think of last night was like 75K of those positions get liquidated. We've got the halving coming up in April, right? It's like April 14th. Is this a buy the rumor, sell the news again with the halving and still a month out? Maybe but if we see this big liquidity open up at 75K, is that the extra surge and the extra fuel to get this thing up where all of a sudden we're talking about this next week and the next, 1 to 2 weeks where Bitcoin's at 100 grand? It's possible that, and here's the good thing, right? If you're in Bitcoin in any way, shape, or form, and this thing runs to $100,000, everyone's going to be excited. All three of us are sitting here watching this chart. We would know that there's also going to be a breaking point. And so I went back to this morning. I mean, similar to what we saw on SMCI, right? This stock was just ridiculously bullish, and we ended up hitting an RSI of let me go to the RSI here, of 93 and change. I rarely see an RSI reading over 90, let alone 94, 95. This is about the same type of situation I would see on Bitcoin, where we're registering 83 on RSI. We're still stretching higher. We have all these pivots to the upside. What you don't see though is, check this out. We're going higher in price. We're actually going higher in momentum still. So there's still an agreement right now with the current direction. I know that we can miss these pivots. I know we can keep stretching. But if I go back to where we had some of these major tops, the major tops that we saw, look at the combination. So we're way up here on the momentum oscillator with some strong disagreement. So we had a top in momentum and then a disagreement. Right there is where we started to see the top. We had a strong top with a big drop in momentum. So I mean, I like the combination, not just one over the other, but even this reading on the RSI at these, all-time highs previously at 64 and 68K, we were sitting around 87 on the RSI. So I will say this, I'm watching for, 86, 87, 88. I'm looking for that clear divergence on the momentum oscillator. And I don't know what that price is going to be, but we have seen a big run. I haven't seen gold rip like this in a long time. Bitcoin's obviously been just coming out of the gates with everything. Somebody asked me this morning about GBTC. There's been inflows like crazy, right? I think those ETFs that were approved, there's over 300,000 Bitcoin that's been accumulated in those. It's like $12 billion worth of value right now, and going up because the Bitcoin price, since we had those ETFs announced, announced around 48,000, pull back to 39. And here we are talking about almost doubling, right? From the dip at 39. Okay, so get us up towards 80 grand, and everyone that got involved with these SEC approved ETFs has doubled their money in a matter of like 2 or 3 months. It really is insane what's happening with this price action.
Yeah, it is. And it's, as crazy as it is, it's like Bitcoin 101, like when it does its thing, it does its thing. And, it's related to its ancient grandfather, which is gold. You take a look at some of these charts. When gold makes its move, it makes its move rapidly. Like here was the crazy run-ups to 2020, and then it just goes dormant for a long time. I think, and again, it's I would love to see it, but I think we could be on the cusp of a little bit of just I want to say like a metals market boom, but it might just be more aligned with what Frank was mentioning about Bitcoin participating as well. Maybe a little bit of just a question mark on the dollar, sound money kind of breakout. So I don't know, Frank, in terms of gold, we've been talking about Bitcoin, we've been talking about stocks. Do you have any thoughts on gold right now?
Well, it depends on tomorrow. If tomorrow comes in hotter, then I'll still stay bullish on gold. And then I'll probably look to enter on this break and whatever this price move was from the all-time highs of 2148 to 2180. Hopefully, it'll find support there, and that'll be more of a clear entry level for me. But today doesn't look like it wants to come down, and I think if tomorrow comes in hotter, it's probably not even going to touch that level. But if it comes in lower, it kind of relieves that pressure of stagflation, and we can deal more with our current situation, and the Fed won't feel forced to cut rates. So I think if we see lower inflation, maybe we'll get a pullback on gold. And at that point, I'm still unsure if I want to stay long, because that's sort of the whole idea here. So I would like to see a pullback, which is why I'm mixed. But if CPI comes in hotter, then I feel like I kind of have to look for a different sort of entry higher on gold.
Okay, fair enough. Yeah, I mean, I think a lot of people are in the same camp. I've just had flow in of comments of, hey, what do we do with gold, right? And so of course you should always, my cheeky answer to those people who are like, what do we do with gold right now, is you should probably have a strategy that tells you what to do. You probably shouldn't be asking people what to do. However, I do think that a lot of people, I made this point earlier, a lot of people are going to get in trouble trading things right now. They're going to chase because they think it can't possibly go down, and there people are trying short it thinking it can't possibly keep going. So I think you just wait. You wait for it to reset. You wait for it to chill out a little bit if you're not in it. But I did also want to, just before I step out, give you guys a show here. My FXI calls that I sold last month, they expired out of the money. So I shorted them. So I collected the full premium. I've now just re-upped my calls that I've sold against FXI. So really simple strategy here. But basically, I have a little bit of Chinese stock exposure, FXI here. You won't see the trade anymore because when you have options, one thing I don't love about the integration, it won't show options trades. But anyways, I do have a $25 strike price call that I've just sold against FXI. We'll see how that goes out, but Chinese stocks kind of trading higher here in the early session. But with that said, guys, I'm gonna step out, give you guys the floor here for a little bit. Frank, feel free to stick around or hop off, whatever you'd like to do. And Chris, you've got the show from here.
Okay.
All right.
I'll stick around for a few minutes, Chris, and talk some options plays I'm in, and then I want to hear some of your stuff too.
Okay. Sounds good. Let me go to, I'll go to the SPY really quickly with the trade that I talked about this morning. So a couple things I have running. I do have some diagonals, which means longer term, I have a bullish call on the SPY. Near term, I have a long put on the SPY. I think that my long puts honestly are likely, if there's going to be a week that comes together as far as corrections, this would be the right time to get it. So like now with CPI, PPI, kind of the tipping point we saw from last week's price action, having this, crazy 20+% rally. Even if all I did here, Frank, was put a fib from that October low to last week's high. I mean, just looking at like a simple 23% correction or a Gann retracement number at 30%, I mean, this puts a healthy correction in the potential driver's seat with like 493 or 490. I'd love to see it. I'd love to see a nice like 3, 4, 5% correction, give buyers a chance to see a dip and buy a dip, and give bears a chance to be proven right for once. Just saying, like it balances out pretty nicely. But I am curious on the news this week. We have 0.4 expected on the monthly. We have 3.1, which is not necessarily seen as an improvement, right? I mean, I'm curious what you make of this. You see CPI year over year forecasted at 3.1. I mean, we had a previous print at 3.1 when it was expected. I mean, the trend has obviously been lower. The Fed is still talking out of both sides of the mouth, where they don't really want to do anything. Most of the Fed members are talking about not cutting rates at all this year, which we likely know is not going to be the case. There's going to be some rate cut. It might be a test rate cut. But it's just noise and it's news. And so I'm looking at it like I'll trade it both ways. What I do expect is good volatility. So a couple things I've got going on in the short term, I'm bearish. And so let me get up a little chat box here. So I have a 507.50 long put on this, and this is on the SPY. So I've got a 507.50 long put, and I'm looking for, my price target ideally would be like the 497 or lower. And so I'm looking for, $10 of profit on that if I can. And then on the Qs, I did the same type of thing. I did a 440 long put on the Qs, and my price target would be probably 430 or lower. So that's near term. I'm going out to April 5th. I'm going out to March 28th. I'm giving myself that window of this week's news plus the FOMC next Wednesday. I'm not trying to be super particular on the timing. But then against that, I'm looking at re-upping, buying longs, and trying to get longer term. I think the highs get tested again. I'm not really that concerned. I think we're going to make more all-time highs. Anyway, that's my thoughts. So bounce some stuff off of me, and let's chat while I got you.
I'm with you. I want to see the Bears be right for once, and that's not because I am a bear, but because I don't want to keep. I feel like I'm forced to participate in the market, and I want to see like discounts. And I want to see prices, better prices overall, just value wise. And I don't mind trading momentum, but at a certain point, it's like, okay, well, I'm gonna have to cash out of these positions because to me it just feels too high to own ultra long term. So I am not doing anything super, I guess, creative other than I'm selling or I'm buying puts on IWM. I did that last week on Friday, I think.
Okay.
I bought a call on the VIX. And I'm also short semiconductors. So I'm betting on that inflation number to come in and be bearish. But if not, then I'll have to get out and take my losses. But that's where I stand right now.
So let me get this straight. So you're doing a long put on IWM, a long call on the VIX, and then you're also short. Did you short the semiconductors ETF?
I took or I just bought the index. I bought SOXS. So there's no options on there.
I gotcha. Okay. SOXS. Oh boy, you're doing a triple leverage action. Oh baby.
Yeah.
Okay. The triple, I'm not sure what your holding window is here, but if it's near term, I think this plays great. If it's more than a week or two, just be careful on that because a lot of these are priced for like very, very short term hedges or very, very short term directions on these double and triple leverage instruments.
Yeah, this is going to be for a few days. I'll probably close out tomorrow.
Okay, no, that sounds good. Interesting on this. Have you seen any movement so far? I mean, obviously Nvidia dropped $100 from last week's high. We're sitting here at 332, and just price action hasn't really done much of anything on this as of yet. I want to see there is a semiconductor. I thought there was like a general ETF, SOXL. Yeah, this one, the SMH.
SMH, yeah.
Yep. So this one, I'm pretty sure I could do something on options with SMH. And I don't know. I don't think I'm going to short this or anything. I'm kind of not chasing the semiconductor stuff at all outside of out of the money bull put spreads. I think Nvidia would have to come down to like $640. SMH has to come down to $600. I'm so far out of the money on those things. Like I'm not really that concerned with them. But if I want to look at some fresh positions in the near term, yeah, I mean, I'd love to see this big wick high, like maybe get retested but fail for at least the near term correction. And again, I look at this with a lot of these charts. Take this recent low to this high and something very simple, a 236 pullback or a 382 pullback, right?
Yeah.
I mean, this is like technical analysis 101 using fibs, some Gann retracement levels. It's healthy, right? It's healthy that the market moves in waves. I think traders have been so conditioned to think that we just get nothing but momentum all the time and, hodl it forever and diamond hands it and it will never stop. It's like the market still moves in waves. There's still peaks and valleys. There's still pushes and pullbacks. And
Yeah,
so
true.
I'm hoping that one of, this reality is kind of coming in now where these runs have been incredible. They really have been. This has been one of the biggest bull runs we've seen kind of one directionally since the 90s. And I think I just measured this out from the top last week into the previous all-time highs. We'd have about a 7% correction. I don't know if we necessarily have to get there at 7%, but we could certainly maybe test that, 3 to 4 to 5% correction. And that's still healthy in my view.
Yeah, that's what I'm hoping for too. It's nothing super greedy. It's a pretty conservative view. I think that a pullback is due, but it doesn't have to be a giant one. I'm
Mhm.
playing it to where it can be a slight pullback and still walk away with something, but I'm preparing for the worst, I guess, just because I'm just kind of afraid of this CPI number tomorrow. I'm afraid of this stagflation issue, and
Yeah.
I want to keep myself above water as I hold stocks. So I'm trying to hedge against any potential losses. But
Sure.
I do have to write this article here today and get it done within the next hour or so. So I think I might be hopping off, but
Okay.
leave the
That's
show to you.
can you give me like 60 more seconds? I want to ask you, so this
Sure.
stagflation scenario, do you ever look at this metric here? The website's Trueflation. They kind of do their own third-party calculations.
I've never
Just
looked at this. I didn't know
okay.
what this was.
So I'm curious because I've been tracking this for the last like 6+ months, and obviously the reading here at 1.66, it's been trending lower. Looking at what we see this week with an year over year expected to be 3.1. What's going to be interesting to me is if we see a forecast of 3.1 and we print 3.1, does the market take that as a bad thing? Because like, does this show like, oh boy, inflation is stickier? One thing I will also say is, are you in Atlanta with the team? Are you in Georgia?
Mhm.
Okay. By the way, I'm flying into Atlanta the first part of April.
Oh,
I don't know if
really?
you guys are around. Yeah. So
Yeah, you should come visit us.
okay, I think
We're
I
out
can
in
fly into Atlanta, grabbing a rental car. I'll be spending some time in well, I'm going to the Masters. So I'll be there, but I'll be there the whole week. So if it works out to hook up with you guys, that'd be awesome.
I got you. Yeah.
Um what I was gonna say is looking at these numbers and pay at the pump. I'm out here in Utah and I've noticed about a 60+ cent swing on just regular unleaded gas. Inflation's not going away. Like stuff is stickier out there and it's always energy, food, shelter. It just depends on if the Fed's going to ignore those metrics and call it core CPI. But I'm curious what happens this week, right? Technically, I think a correction is long overdue. I think we're going to get that more than anything. That'd probably be the driving like price action. But a 3.1%, if we print 3.1 or higher, I think the market has that type of like green light to sell off a little bit more aggressively, at least for this week. So
Yeah.
we'll find out. And then of course Powell can come back next week and maybe balance things out. But I think the runway is hopefully set up for a dip to the downside, a healthy correction. It's been a heck of a nice run for the first 2 months and change, but hopefully a reality check is good.
I agree, and I hope so too.
Okay. Well, let's touch base again this week. Good luck with the article, and I'll grab it here for another few minutes. Thanks, Frank.
Okay.
All
Sounds
right.
good.
Thanks, dude.
Talk to you later.
Cool. All right, everybody. So SPX I'm looking at here, correction, like I said, around 7%. SPY, very similar. And I know on my charts, I mean, I know if like I said, the charts are horrendous. Look, man, I've got some trend lines on here. It's pretty basic, but when I open up my charts, I don't see anything other than price action. I know I've got these dark lines on here. I know it looks a little bit messy at first, but believe me, for me, I can make some sense of it. So correction on the SPY, if we get it from the top last week, if we get to this previous all-time high retest, that's a 7.7% correction. So truthfully, I mean, here's the deal. Most of the times the market does this. This is the highest probability on the SPY as an example. You're going to have less than 1% move most of the time. Like 60% of the time, you're going to get less than 1%. Okay. So your, 1 to 2% move is going to be somewhere between like the 20 to 30% probability. And then your 2 to 3% or beyond is less than move, maybe let's see, 20, 30% of the time, this one's going to be 10% or less. Like typically this is super, super slim. To get like 2 to 3% or 3+%, you're talking like literally a 5% probability. So here I am looking at this map of like, oh, we got a 7% correction. If we had a 2% move to the downside this week, that's a big move. If we had a 3% move to the downside this week, that's a huge move. Okay. Now the nice thing is if we have it, and it's certainly possible, if we have it, the potential profit is massive. And I think even some very pragmatic, rational traders that I follow quite a bit, and I respect their setups and their thoughts in the markets, even they are taking kind of I would say for right now it's the short term asymmetry of more reward the risk. If we're right on the downside, if we're proven right on the downside, at least in the near term, I think the reward to risk setup can be really favorable. So I don't mind taking jabs and stabs at the short side. I am currently short right now. Like I said, I've got the long put at 507.50. I'm also looking at the this is my long put on the SPY, 507.50 by 480. So I'm giving myself like, $27 of potential profit. I'm not going to take profit at $27. I realistically, if I get 10 to 12 to $15, I'm going to take some profit, right? I'm sitting just upside down a little bit by a couple of bucks on the SPY as far as extrinsic value and real value on my option. If I go to the QQQ, this one I have a 439. So my long put's actually, maintaining value. I have one account that got a nice head start because it came into me later. It's like 443 or 445. That one should be pretty profitable at the moment. So if I come into this account, I believe on the Qs, this one I've got the 445 long put that's in profit by a decent amount. So that's good. The overall position right now, I'm up about $8. I'm not sure what I paid for it overall, but I can check right here. So that trade was a 766 debit, and right now it's trading for $10 and change. So I'm already up. I'm up just shy of $300 in that position. I'm trying to squeeze a little bit more out of it if I can. I'm trying to squeeze, if I can pay 760 and get a $5, $6, $7 credit for it, obviously $10 credit would be awesome. So I'm giving myself a little bit of wiggle room. I think that, if I'm going to be right, I've got time in all these trades. And as we've been noticing here the last couple of weeks as well, is if we break this trend line, if price breaks and flirts with this trend line, these all-time highs become a very logical retracement spot. So on the major indexes, that's what I'm watching. I saw that Frank was talking about being short the IWM. I'm actually looking at the IWM as if we get a dip or a pullback. I like the idea of this dipper pullback to $200. If we get a deeper pullback towards like 190, I'm going longer term bullish on the IWM. Still because we have the large cap Nasdaq versus the small cap Russell. The problem with it, if I could, I'd love to trade the Russell 25, but I can't. There is an IWX that trades the top 200. The IWX has been killing it compared to the IWM. Look at the difference here. If we go to, this low to high, we're up about 29.8%, which obviously seems great for this index for the Russell 2000. But we're up 29%. But I just want you to see the price action difference between not getting back to the all-time highs on the IWM versus on the IWX. We're at all-time highs. So that concentration of the top 200 stocks, the top 200 of the 2000 have been outperforming. And here we are from this low to high. This is up, it's up less in percentage, but man, it's at all-time highs. So I don't really know what to make of this. If the Russell's still maybe clinging to the idea of a bigger breakout, if small caps can kind of outpace. But I think if we have a broad market sell-off, everything's going down. The SPY will sell off, the Qs will sell off, the DIA will dip a little bit. The Russell will certainly go with it. There's more volatility typically in the small cap than there are large cap. So again, my thoughts this week and the way I'm going to position for it is I'm looking for some bearishness. And it's not just this week, but we have this week and next week. That would be the nice little window to see markets dip. We also have very little earnings left in the chamber, I suppose, this week. I think 98% of companies have reported earnings for Q4. They've already had their earnings reports. There are a couple that I'm interested in if anybody's out there trading earnings. I posted this in my Discord channel as well. Some of the top setups with your A1 EdgeFinder is absolutely great. In my Flex trading room, we are long pound New Zealand. We're long pound Aussie. We're long Euro New Zealand. I switched and got long pound dollar. I'm long on gold. I'm not in the Nikkei right now. No trade on the Euro CAD. I'm short right now with the dollar basket. Meaning like I'm looking at dollar strength, and so I'm actually I'm short on the euro dollar, but I'm wrong right now on the euro dollar, and then pound CAD I have no trade. So pretty nice for these top setups. 1, 2, 3, 4, 5. 5 of the top setups. I'm in all these positions, and my technicals plus A1's EdgeFinder finding some great scores on the software, and we put those trades in the last week or so in my trading room. So nice to see the correlation right there, and hopefully we'll get some nice profits. And if you have any questions, go ahead and type them in the chat. Mark is saying oil coming down to 76. I still like oil to the upside as well. Yes. Yep. So, I mean, unless here's the sensitive nature of oil, right? Unless we're going to all of a sudden start flipping this into like, oh boy, there's going to be a slowdown. There's going to be a recession. The 3-month versus the 10-year has called recessions 8 out of 8 times. It's still inverted. If you go to the US 3-month, okay, the US 3-month yield is trading at 5.38%. The US 10-year yield is trading at 4.09. The 3-month and the 10-year has been 100% accurate for 8 recessions. They're still inverted. We've had one of the longest running inverted yield curves that we've seen in a long, long time. Here's the thought. Something troubling is a brewing, which is why I think we also talk about these kind of outliers with Bitcoin right now and gold right now, and the big potential swings of the dollar. But a 3-month 10-year has been spot on for recessions, and it's just a matter of when. Typically, the lag between a 2-year and a 10-year is about 16 to 24 months. We're right in that wheelhouse right now where we could get through the rest of this year with, quote, no recession. And then 2025, I would say, good luck. It doesn't matter who is president. It doesn't matter what the economy looks like. I think 2025, if we continue to melt up at this pace, I think 2025 is going to be a wild ride. And especially during election year, I think that the Fed would be very stable this year. As far as if we saw a big nasty dip in the markets, the Fed's going to come in and probably not have to cut as much, or be reactive with the cut to try to stabilize things. So in an election year, I think the market's going to do everything it can to cling to these gains. I think the U.S. government does whatever it can to not disrupt the price stability, and just continue to trade. I'll take my stabs both ways. I will position myself accordingly with a lot of options because I can make money up, down, sideways. I don't have to have these big predictions be proven right. Give myself plenty of time, lower the cost basis in all my trades, be really diversified. I mean, there's about 6 or 7 strategies I'm deploying right now that are high probabilities and some nice profits, regardless of what the market does. Okay. Let's see here. Can we go through the pound dollar? Yep, sure. So let's go dollar index really quickly. I'll go for a few more minutes here. So the dollar index has been a pretty challenging instrument this year because this was the best read. So in my trading room, we were long on the dollar. In my trading room, we were short on the dollar. We then started to see the pivot during the holidays, but this pivot to the upside did not necessarily translate into full dollar strength. We saw very limited movement and very mixed movement from this holiday pivot right around that 101 mark. And here we are looking at lots of noise. Now, I look at it this way. Zoom out for a second and just see into the forest with me. Can everyone see this broadening pattern? So we have higher highs on the technicals, and we have some lower lows, but we also have equal lows right in here, right at that 101 mark. So here's what I think. It's a tough call on the dollar because there is that tight correlation between the DXY and the S&P, right? So if the S&P goes down this week, I would not be shocked to see some risk off trading, which would flow into the dollar, likely flow into the yen, possibly flow into the Swiss franc as well. That would be if the market dips, the stock markets dip overall, the dollar's likely going to tick up. So I did take a position over here to get long the dollar basket. It's gone against me a little bit. I stopped out of the dollar yen with an incorrect position. I stopped out of the pound dollar because the breakout looks solid to the upside. Okay. But if we start to see this pivot again, which this just runs this level, we pivot off the backside of the trend line. If the dollar's higher this week, I think I still see this pattern as a reason for the dollar getting a little bit stronger. Okay. So dollar index wise, like I said, it's been confusing. We've had some topsy-turvy moves the last couple of months with a lot of indecision, kind of fake out highs, fake out lows, but we're going to see some type of trend catch foot. I mean, there's going to be some traction on a trend in the dollar. If it's down, that's good for the stock market. If it's up, that's bad for the stock market. I'm trying to keep it very, very simple, but I don't have a clear direction right now, right? So William says a lot of bearishness overall. I mean, it has been, right, from this peak. I mean, yes, the dollar has been bearish, but to me, this comes right back into an area where if we pivot off this level and the dollar gets back and chews into this yellow box this week and it shows bullishness, I still think this has, off of this holiday low, this has a potential swing opportunity to see dollar strength, right? And again, dollar strength doesn't have to be stock market weakness. We can, and we've seen this in the past, we can see stock market strength and dollar strength, right? Think about these central banks. Bank of England likely cutting rates this year. ECB likely cutting rates this year. Bank of Canada likely cutting rates this year. Bank of Japan maybe finally switching from negative interest rates into zero or positive interest rates, possibly unraveling the entire carry trade. The Fed likely cutting rates this year, but they're so reluctant with their language. It's just how much. Are they going to cut by 25 basis points? Are they cutting because they're going to be reactive like something's breaking? That's what we don't know. But central banks are not going to hold firm and probably not raising rates. That's the last thing they want to do is raise rates. I think every central bank right now, they do not want to raise rates. That being said, there's still inflation. There's still the threat of inflation. There's still the potential print of sticky inflation. That may not force the Fed to raise rates, but it's certainly going to force them to be very firm on their narrative of, well, based on this data, based on, making sure inflation doesn't rear its ugly head once again. They will just try to talk it down. They will try to jawbone it like crazy. And I do think a lot of central banks are on the sidelines waiting to see, like, if and when the Fed cuts, you're going to start to see some pretty aggressive cutting across the board, where these central banks have probably raised faster than they wanted to. It's out of their comfort zone. Monetary policy is going to have some definite impacts on the market this year. Okay. So as far as the dollar index, that's my outlook here. I did switch my position, like I said, on the pound US dollar. That could quickly be proven wrong. I will say this. I mean, I feel like I'm chasing a little bit. If the pound dollar can hold the structure in here, then I'm good, right? I mean, it's one of the top setups on the EdgeFinder. I would want to see the pound dollar stay above 2,700. We stay above 2,700. We still got some potential structure to hold this thing. I don't love it if it comes back in the yellow box. Okay. If it gets below $2,700, I think we're going into, this is a fake out, dollar strength prevails. We might see the pound dollar dip again. Okay. Now I'm not reversing. I'm currently long on the pound dollar. I'm long. But if I get below 2,700, I'm going to bail on that position, take a small loss, and then reassess. But if it holds, we get a nice little break. We have a little retracement. If this holds, good. I'm holding this thing towards 130. That's my outlook. Okay. Russ says, what will happen to the Swiss yen? So the Swiss yen's already started to make a move. This is a really clean trade. We found this we've been watching this for like a month, but we had all this indecision right in here. We had tons and tons of indecision on the Swiss yen. And finally, we made a nice clean range breakout. Okay. So that to me has been pretty solid, even if we have a pullback. Okay. So even if we have a pullback, I'm still looking at Swiss yen to unravel. Chart wise and target wise, something like this, if we connect these lows, something around this 165 area would be pretty fantastic. And I also mentioned this to traders in my flex room. If we challenge this low, we could be setting up a huge head and shoulders pattern for a much bigger decline. And this is one thing that I'd be very excited about. Pattern trade, it's black and white. There's huge reward for measured risk. It's typically 2-to-1 or 3-to-1 in these big pattern trades. I'm still sticking to my guns here. If I took a trade over here, let's say I get this pattern. If I sell this anticipating my profit, my stop loss to me, I'm still going to risk about $100. I am not going to let the Japanese yen be a reason that I lose a bunch of money. I could lose thousands of pips, but I'm only going to lose a few $100 on the yen pairs if I'm dead wrong. If I'm right, then I can add and add and add. And I can start moving stop losses, and I can turn this, $100 max risk into maybe a $400 to $500 profit. Obviously more would be great, but I'm just so skeptical of the sustained strength of the yen, because it's so easy to see that we're in a positive swap environment. Carry trades typically don't unravel that aggressively and that quickly. We've only been in a carry trade environment since 2023. So we're just into, a 13, 14-month window of positive swap. And I just don't see the whole thing unraveling. Okay. And fundamentally, Russ has a good point here. Fundamentally, Swiss could also be weak. Fundamentally, I have been so short on the Swiss. I'm long Aussie Swiss, long CAD Swiss, long Euro Swiss, long pound Swiss, long New Zealand Swiss, long dollar Swiss. And now I'm short Swiss yen. I'm literally against the entire Swiss basket, going for some Swiss weakness. It's one of my favorite trades. It's been that way for the last, almost 2 years. So I've been holding, I've been investing, I've been position trading against the Swiss. And right now showing some really good profit, and there's a lot more to go. So I'm going to continue to hold that, and hopefully that's a reason for some big profits ahead. Okay, pound Aussie from Vincent, and that'll be the last one I take for today, and then I'm going to roll out of here. Pound yen, Kata. Pound yen's probably my least favorite, to be honest. Pound Aussie and pound New Zealand I still like. So this one, I'm long in the pound Aussie right now. We took a buy trade in here. I have another buy trade down here and a stop loss below. So this to me is, potential bullish pattern. We're starting to run out of some space. We might just have to have some equilibrium. So if we pull back to the 382 or 50, I still like that swing trade to the upside. I will say this: if we have risk off flows, the pound Aussie is probably going to go up. I mean, the Aussie is probably one of the more sensitive currency pairs for risk on, risk off trading. Dollar is as well, but as far as risk off trading, the Aussie tends to get weak very quickly when we have risk off trading. Okay, the pound basket wise has been positioned for one of the better setups. I see the pound basket showing some pretty good signs of strength. And technically, I like the pound Aussie. I like the pound New Zealand. The pound dollar just reversed, so I'm trading that to the upside as well. Pound yen, like I said, is my least favorite. How do you figure out the direction of the Swiss? I mean, I just look at the charts. I mean, if you go Aussie Swiss and you go to a weekly time frame or monthly time frame, I'm sitting here asking traders, look, if retail price action matters, and you can go to any Swiss pair like this. If I go back to the retail price back here in, 03, 04 or into the 90s, would you rather be a buyer or seller of this instrument? Ignore the fact that it's the Swiss. If I showed you a chart and we're trading here near all-time lows over a 20-plus year period, I'm going to be a buyer. CAD Swiss, same thing. New Zealand Swiss, same thing. Pound Swiss, same thing. All these positions to me technically in the Forex market, we've got 20 plus years of price action. Yes, I know the Swiss franc does some crazy stuff and the Swiss National Bank does some crazy stuff. Doesn't matter. I'm trading small. I'm building in. I'm willing to invest. It's positive swap right now. So this is why I've been in this trade for the last, it's literally been 2 years. But to me, 2+ years of holding for I'm hoping I can make 100+% in my entire account. That is my goal. So for me to hold it for 2 years and make 100+%, it's worth it. I don't care if I have to wait 2 years to make 50% annualized, So good stuff. So look, if you're interested in stuff like that, I have trading rooms. You can join my Discord. I know that the team posts that stuff for me, which is great. Here's my Discord chat. If you're interested, I'll post that link. So let me go into my free group chat. My YouTube channel, I know they post that quite a bit. So let me go into a link that doesn't expire. And new link here. So copy. So here's my Discord. And all are welcome to join. And if you have any questions on that, you can send me a direct message in the Discord, or you can just use a free group chat. And I'm monitored every day. So check it out, and off you go. Okay, I'll wrap it up there. I've got a few minutes before I jump into my Equities On Demand trading room. Thanks a lot for being with us today. Happy trade, lots of profits. It's going to be a crazy week. I'm excited to see where the markets take us. Hopefully up, down, sideways, and make some money. And I'll see you guys later this week. All right, thanks, everybody. Take care. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.